Hello, fellow Aussie investors. Welcome to my YouTube channel, Backyard Money Tree. Look, I don't know about your money tree at the moment, but mine is certainly on fire. If you're still wondering what happened over the weekend, it's called Trump tariff, also known as Liberation Day, apparently. If you're seeing low red, make no mistake, we all are, I think. My portfolio has definitely went backwards. I was actually quite happy. I started back in, as you can see, August, September last year, and probably put in about $90 to $100,000 of my own investment. It's obviously grown quite a bit, as you can see there, at its peak 145, but over the last couple of weeks, it evaporated probably about $20,000 Aussie dollars. So there you go. It was quite healthy. The total return was about 40%. Now it's sitting at 10%. Hopefully it doesn't fall below my benchmark goal, which is more than the Vanguard ETF. If it drops below that, I might start crying. Who knows? Talking about goals, the good thing about this current market is that stocks are cheap, and there's obviously three stocks that I like to share with you, which I think is probably worthwhile looking at. And one of them is McMillan Shakespeare. It's a salary packaging firm. Its dividend yield at the moment looks pretty fairly good. So if we just have a look at that, MMS, yeah, should really double click. You can see it's 11.4% yield, and therefore I think it's definitely a buy. Its main income-driven business is from the novated lease, and I think the current electric motor vehicle being exempt certainly makes that push, and that won't be phased out until 2027. Currently it's an election campaign going on, so be watch out for any news what the both side of the government will do in terms of this particular space. But for comparison, if you have a look at SIQ, which is Smart Group, similar firm, I'm pretty sure they do the same thing, salary packaging, and also market cap's very similar, 900 million to $1 billion for both companies. You can see the dividend yield is a little bit lower. So a McMillan Shakespeare is definitely the go-to, I reckon, in this particular situation. The next trade is actually EDV, which is the boss of Dan Murphy and BWS. If I learned anything from COVID period, is that we Australians love the alcohol, even in times of dire consequences. So if there is a recession coming on its way, I think this particular company is definitely some safe haven to obviously earn some good rewards for dividend. You can see there 5.7%. You can see I bought some here. I'm probably going to buy some more at this point, which is about $3.70 or $3.80. Definitely put that on your radar as well. And the final stock is a non-dividend paying Tyro payment. The reason for that particular stock is also down with no news, pulled down by the overall market sentiment that things are going to go bad. You can see I bought some here, I bought some here. I'm thinking this looks too good to not miss the opportunity. For sure, it looks like all the way down, but it is, I believe, at the moment the fifth largest merchant behind the four banks. So definitely there's some growth. You can see some of the valuation by Morningstar. Just up yesterday was actually 4-star. Today is 5-star, probably due to the undervaluation. So there you have it. 3 recommends. Have a look. But of course, always tailor to your own situation. Don't follow mine, obviously, shares blindly. You do need to have a look at your own circumstances before making any investment. Now, if you like this short video and wanted to see more, please hit that like, subscribe, and engage by leaving some feedback in the comments. Maybe tell me some of the shares that you have on your radar. Thank you very much. See you soon. Bye.